Good morning. Today is Friday, July 21st. The time right now in Singapore is 11:23 in the morning, and we are almost at midday. Now, overall, we see that U.S. equity market have a mixed outing last night. We had the Dow Jones Industrial Average registering a new high for the year at 35,372.8. Now, this is just a whisker away from an ideal price to sell at 35,415 to 36,082. Now, technically, I've already sold as the market traded very close to 34,712. So we can see that the market is getting a little bit toppish. Why I say that? Because overnight, for the last 2 nights outing, we can see that both the S&P 500 and the Nasdaq 100 has not kept pace with the rise in the Dow Jones. It means to say that although the market has been led higher by these two indices throughout the year itself, now we are seeing a little bit of profit taking going on in both equity index in the Dow Jones, in the S&P 500 and the Nasdaq 100. So this could actually potentially means that we may have already hit a peak in both two equities index. So that leave only the Dow Jones, and if the Dow Jones also start to decline going forward, then you will have what I mean by confirmation among all three major equity index. So let's take a look. If we do get a pullback, my immediate target is somewhere between 33,400 to 33,600, which is the two nearest low that we see here in recent times. And over in the S&P 500, we can see that the prices has been easing off. The high so far is 4,577.6, and this is well within the bracket of prices which I believe to be vulnerable. That is 4,512 to 4,537. So if we do get a close below 4,512 tonight, because it's the last trading day for the week itself, that will set the stage for further decline going into next week and perhaps into August. And ideal level, immediate target is 4,328 to 4,385. So do watch out for that potential pullback in prices. And over the Nasdaq, we see the decline in Nasdaq now is becoming more pronounced. Overnight, we have a more than 2% decline in the Nasdaq 100 itself. We can see the peak is at 15,918, and this is just a little bit shy of my target at 16,266 thereabout. So, but the way it's falling off now, when I show you the weekly time frame, you can get an idea as why I think the market may have already has peak performance at 15,918. Now, if you look at this particular chart itself, in particularly how the formation of this bar, now, of course, we have one more trading day to go. It's still a little bit too early, but the fact that yesterday closed at the near the lower end of the range for the week itself set the potential for the market to close with a reversal pattern. So this is a key reversal signal here. If we do get the market to close lower than what we saw yesterday night, then I think potentially we may have already seen the peak going forward. Okay, to see this in the higher time frame such as the weekly is telling us that the market is losing momentum, and this is potentially setting the market down for a down move. Okay, so do watch out for this potential reversal here. Now let's go on and look at how Asia performance. And in Asia itself, we can see that the Nikkei is pulling back this morning. So I maintain that the rebound from 31,791.7 has been very shallow, and the price is back into this bracket of prices, which previously I deem it to be supportive, although the market actually took out this level marginally. The low at 3,791 is actually lower than my lower range of this buy zone here at 31,950. So you can see the prices may have a chance to bounce. Okay, maybe it will set up to a three-wave rebound, but I think this time around, if we get a three-wave rebound, it will not be more than 33,500. Okay, so do watch out for this very weak rebound to set up for a larger degree pullback here, potentially targeting somewhere at 30,500. Okay. And over in Hang Seng, we can see that Hang Seng has actually stabilized a little bit this morning, and we can see that the price has been trying to go higher, but by and large, the two things is possible. We may see an extended rally towards the 20,155 to 20,290 levels, and this is about all that I think it can do if you are very optimistic about how the Hang Seng is going to perform. But by and large, I do see continued weakness going into August. Over in the Shanghai Composite Index, we are seeing similar things. We are seeing that the mainland equity index has stabilized a little bit, although this morning we have a low at 3,160 thereabout. And the market, if it ever rebound, okay, top side is probably around going to be 3,263 to 3,290 levels. It won't be much higher. So I would say that this is a corrective rebound, setting the stage for further decline as we go into the August itself. And in energy prices, we see that crude oil prices managed to rebound overnight. The high traded this morning is at $76.43 for an overnight low of $74.47. But by and large, I do expect it to decline lower, ideally into the $72.64 and $73.36. So this will be a much better level to actually engage the market on the long side, because if potentially I think the market will go higher than $77.30, perhaps even to $80. I'm a little bit more optimistic than that, but for now, I think if the market can go up to $78 to $80, I think that will be a feasible target to aim for now. Okay, over in precious metal, we can see the precious metal ever since it hit a high of 1,987.5 has been coming down, and this level has been crucial because there's this horizontal blue line here, was the last swing high here. There was that is actually capping the market, so the market actually went up and then come back down. So this is potentially a fake move, and the market is bidding itself down for a three-wave decline, ideally targeting $1,945 or $46 thereabout. If the market do come down to those levels, depending on how the pattern unfolds until it gets there, I think there is a possible buying opportunity, but again, it has to happen fast, because as we go into the end of July and into early part of August, there is the danger that the entire precious metal market may go down significantly. So for now, I think there is still a little bit more upside left. So let's see whether it all pans out. If we see a price drop to 1,946 before the end of August, I think before the end of July, I will still be keen to buy for another push higher, possibly to test the $2,000 level, but I don't expect it to be able to sustain much higher until the next sell wave comes in. Okay, and over in the silver market, you can see that silver has actually have a more pronounced pullback last night from a high of $25.27, and ideally this can unfold in a three-wave pattern targeting $24.11 and $24.54. And then if it got to happen soon, okay, because if the time taken for the market to come off drags into the end of July, then the incentives of buying will be diminished. So I would like to see it happen as early as next week. Okay. And over the dollar itself, you can see dollar has rebounded. You can see actually it went back up to 100.69 in the dollar index, and this rebound is nothing more than a corrective rebound. So do not see anything more beyond that, because eventually once the market stabilizes, it's likely to unravel, and this time it will go below 99.22 towards perhaps the 99 to 98 levels. So this is between the bracket of prices which I expect it to go down into if the market do trade below 99.22. And for all we know, the dollar has been falling for the last 15 months, and it does look like it will continue to fall, especially now there are opinions in the marketplace whereby people believe that beyond this month's FOMC, which is the Federal Reserve's interest rate decision, after one more rate hike of quarter point, the US Federal Reserve may actually hold off increasing any more interest rates. So that is one side of the coin. But the other side of the coin is that when people look at the retail sales number and looking at the CPI, how it comes off, and they say that look, core inflation is still very, very sticky, and for that to come down to their target 2%, they need to hike even higher. So there are two schools of thought right now. It all depends which actually pans out, but market is leaning towards at least one more rate hike for this month itself. So we will take 1 month as it comes. Next month in August, there is no FOMC meeting. So August, there will be no lead coming out from the interest rate front. That will be happening in September, okay? And in the dollar rates itself, we can see that the euro dollar has correspondingly come off very sharply. And this has not been surprised, because I have been talking about this pullback for more than a week now at 112.11 to 113 even. That is the best area to actually short. But if you have not already gone short, the low traded overnight is 111.18. If we do get a minor rebound back to 111.80 to 112, I think that will be another area for us to position short. Okay, and although this is a less ideal level, but it is a second chance nonetheless. Immediate target, not fantastic, possibly aiming from 110 to 110.55. So there's not going to be a lot of downside potential here, but it is good for at least 100 pip for those who are doing short term. Okay. And in sterling, we can see that the drop, it was a little bit more pronounced. You can see the sterling drop is a lot more than what we are seeing in the euro. And the high traded is at 130.142, and the market has gone down to below 128.50 to as low as 128.40. And looks like if we do get a rebound, I don't think it's going to be doing much more beyond 129.5. Okay, so look out for those positions because we haven't had a secondary rebound so far. So if we do get a rebound, just watch out anything between 129 to 129.5 to 129 even. I think that will 129.5 to 130. Okay, that should be where we'll be looking at. Okay, this is an error here. Let me correct this before I carry on. This should be read as 130.27. Hang on. Okay, so this is a correction here. Anywhere between 129.5 to 130, I think that will be looking good to re-establish short position if you have not already sold at the ideal price of 130.70 to 131.84. Okay, over in Aussie, we do see a little bit of bearishness, and the market right now is within the bright an area which I think may actually support this market. The market pulls back from 0.68 half all the way down to this morning low. As we are speaking, the low was traded just a while ago at 0.6760, and this area may actually hold, and this may actually give us another run higher beyond the 0.69 to go to 0.6933. So the target is, comparatively speaking, do not chase upon the breakout of the high here. Instead, if you want to buy, it will be you'll be better off buying at current price, which is currently at 0.6780 thereabout. Okay, in dollar Canadian, we can see dollar CAD itself has also rebound, but the rebound may actually end up as a three wave. So I'm still looking for a target at 132.85 to 133.20 levels. So this is part of a rebound. It's not a reversal. It is not an uptrend. It is just a technical rebound. The market is basically bearish. So I do expect after the market rebound, it's going to continue its decline. Okay, so in dollar yen itself, right now we're very close. In fact, we are already at one point in time within the ideal selling range. I have maintained that if the market do rebound to 140.25 to 141.20 levels, that will be great for selling. And we can see this entire week the market has been rebounding after establishing a low at 137.24 on last Friday. So we have 1 week of rebound, and this week may actually see the prices go a little bit higher, but anywhere between 140.25 to 141.20 will be good to sell. And if the market do take up 141 as it may, then that's even better. Okay, so do watch out for a possibility the market may edge a little bit higher between above 141 to position a short, because I do expect this entire dollar yen pullback from 145 may actually accelerate to the downside below 137. Immediate target is around 135.65 to 135.85 level. So there's going to be a lot more potential. Where if you want to do dollar rate, this will be a much better currency pair to consider, because when you look at euro and the sterling, we are looking at no more than 100 to 200 pips potential, but this one has quite a fair bit. This one is at least 500 to 600 pip potential. So if you want to do a dollar rate, this will be a much better consideration. Okay, in cryptocurrency, we can see that the market is still in consolidation. We don't see much of activity, but I do expect prices to dip a little bit lower. The low so far was traded on June 30th at $29,408. So I do expect this level to be marginally taken out. Ideally, the market dip into this bracket of prices between 28,700 to 29,400. That could be a base for the market to build accumulation before it has one more explosive move to the upside. This time the market is likely to take out 32,000, perhaps even to as high as 35,400 and to 39,000. So this is going to be very lucrative if it actually pans out the way I think it would. So in the meantime, you can consider. Okay, I'm not saying that you should. I'm just saying that to me, it does look like a great buying opportunity here. That's all I have for you for today, and I will see you next week. In the meantime, you have a great weekend again. Bye-bye. Take care.